In this video I want to talk to you all about why Cardano, in my view, could realistically produce investment returns of 10 to 1. And I'm not talking about a random price prediction with no basis. You'll see that this idea has a lot of merit, but before we get into the main section of this video, if you're not yet subscribed to our channel, then you're missing out on monthly crypto giveaways, and all you have to do to be automatically entered every month from here on is subscribe to the channel and turn on post notifications. Anyway, continuing on, many of you will probably know about first, second, and third generation blockchain technology, but for those of you who haven't heard of these terms, briefly. First generation blockchain tech is basically referring to Bitcoin, second generation is referring to Ethereum and their smart contracts, and third generation blockchain tech is what Cardano have done mainly by implementing a proof-of-stake system of transaction validation as opposed to a proof-of-work system. You see, the traditional system of transaction validation on a blockchain is proof of work, and the way that this system operates is that when a transaction is initiated, the data is put into a block and a number of computers called nodes compete to validate the transaction. They do this by solving a complex mathematical puzzle, and the first computer to solve the puzzle is awarded the coin. The problem with this system was that firstly it costs a lot in terms of electricity to validate each transaction, meaning that the value of the coin rewarded had to be fairly high. And this system only works well until all of the coins in the supply are depleted, and once there are no more coins to distribute to miners for their validation services, which hold up the integrity of the blockchain, there is no more incentive for miners to mine, as there is no reward for validating transactions. Bitcoin and Ethereum operate on a proof-of-work system and are therefore vulnerable to these sorts of problems, although Ethereum is in the process of transferring over to a proof-of-stake system, which is a type of system that Cardano runs on right now. A proof-of-stake system isn't perfect, but it solves the issues of scalability and continuity which are limited in a proof-of-work system, and therefore Cardano are actually ahead of Ethereum in terms of technology and therefore the utility which they can offer to customers. Now the reason as to why I'm focusing on Cardano and Ethereum and not on Cardano and Bitcoin is because Cardano offers a fairly similar value proposition to Ethereum, but is really quite different to Bitcoin, which is viewed primarily as a store of value, and so Cardano and Ethereum are realistically comparable. So in terms of operating system, Cardano is actually ahead of Ethereum, and on other fronts such as smart contract services, Cardano are at least as valuable as Ethereum. And not only this, but transactions on Cardano's platform are also cheaper than on the Ethereum platform, which is always a strong incentive for use. Yet considering that technologically speaking, Cardano is clearly superior to Ethereum, and that in cryptocurrency the technological value proposition of any given project is what makes it useful to potential customers, and therefore maximizes that project's long-term chances of success, strangely enough, the market value of all of the ETH in circulation is about $152 billion, whereas the market value of the circulating supply of ADA is just $11 billion. Now my theory is that because ADA is as technologically valuable as ETH, if not more so, eventually the fair market value of ADA should be at least equivalent to, if not higher than the market value of ETH right now, which would equate to gains in the value of ADA exceeding 10 to 1. There are a few reasons in my view which account for the large difference in market valuation, which probably isn't justified. The first and most significant is that ETH has a huge first mover's advantage, not technologically but in terms of brand value and recognition. In the crypto market, everybody knows about Bitcoin, most people know about ETH, but very few know about or understand Cardano, which in itself means that the average investor or higher volume of investors are naturally more inclined to invest into ETH rather than ADA, because of course you can't invest into an asset which you don't know exists. The reason as to why I'm fairly confident that the effects of this discovery bias will be diminished over the coming years is because the crypto market is maturing and market participants are becoming more professional. And when a market matures and the people in that market become more professional, their investment approach also becomes more professional. And professional investors are less inclined to buy the first or second asset which they come across. They're going to look at every opportunity available and compare them on a value-orientated basis. And as this happens, I think that the absurd difference in valuation between ETH and ADA will begin to close. And if I am correct and things happen in the way which I've laid out in this video, it's not at all unreasonable to expect that the market capitalization of ADA will rise to that of ETH or even higher. Because as discussed before, ADA isn't just the same as ETH, it's actually better from a utility standpoint. And with a market capitalization equivalent to ETH, ADA would have experienced a growth of easily 10 to 1 in value. Another point to consider briefly is that Cardano isn't a fixed utility asset like gold. It's a dynamic project which is growing and becoming more useful as time goes by, and remember that being useful is what makes a crypto project valuable. Thanks for watching, and if you enjoyed this video, be sure to subscribe to our channel.